We've seen the PBOC cut those FX reserve requirements. Is this the PBOC taking a leaf out of the OPEC Plus playbook? I mean, it's doing something, but when you consider all the macro headwinds, will it make a difference?
So what they did with the FX reserve cut was now Chinese commercial banks don't need to keep as much of their foreign exchange on hand as they used to. That ought to reduce the demand for foreign exchange, help provide some support for the yuan, but will it do much good? I think perhaps not. The bigger picture here is that the U.S. is tightening monetary policy. Rates are going up in the U.S. just at the same time as China is going the opposite direction. China is loosening. China is cutting rates. And so I think more broadly speaking and looking into the future, I would expect the yuan to continue weakening. This is the PBOC trying to make sure that that trend does not get out of control.
The trend, I guess, when it comes to COVID-0 continues as well in China. Guiyang going under a lockdown as well, John. There's this assumption, it seems, that once the Party Congress starts, that Xi Jinping may start to ease up on COVID-0. But is that scenario looking less likely now, it seems?
I think that it's obvious the government is trying to make the policy less of a burden in terms of the economy, in terms of just people's lives. I think, though, it's very unlikely that China is going to move off of having zero infections as the ultimate goal. And as long as zero infections is the ultimate goal, you will only achieve that, unfortunately, through extreme measures like lockdowns, like quarantines, like mass testing. And so I think in the longer term, we will still continue to see some of these steps throughout China.